Hey Rent-A-Retires, it's Adam Schroeder, and today we're going to talk about if you don't love what's happening in real estate today, what else are you going to do? Before we get started with today's video, let me remind everybody, please subscribe to our YouTube channel and click the notifications bell so that you don't miss out on any of the content we're putting out as we continue to bring you content pretty much every day from myself, from Sam, from our other investment strategists. We love doing this. We love educating you. It is fantastic talking to all of you on the phone whenever you schedule a strategy session with us. But we'd really appreciate you subscribing to the channel, clicking the notifications bell, and don't forget to hit that like button if it's a video that you feel is worth your time so that other people can see it's worth their time and we can continue to grow and educate so that you can all be successful investors as you go about your journey. So let's talk about it. There is a lot going on in the world today. There are a lot of different ways you can invest, but the big thing I have to ask you is, if you're not investing in real estate, what are you investing in? Because right now, we are seeing inflation over 8% annualized. So putting your money under the mattress is not a good idea unless you want to pull out a quarter at some point later in your life, because we are seeing your money get devalued faster than we've seen it in 40 years or so. So with an 8% inflation rate, what are you going to do? And I get it. In real estate, interest rates are up 100% pretty much in just the last 3-4 months. We've seen that run up that have been incredible. I mean, it's been unprecedented. But we've also seen obviously year one returns get compressed, but we are still in a positive cash flow environment and we still have our tax benefits. Nationally, home prices are still up 16.9% year over year. So even if your cash flow is compressed, you are seeing appreciation in your properties. And it is a great thing to have because later you'll be able to pull it out and use it for investing or living or whatever else you want to do with your equity. But let's look and see what on earth your other options are going to be. And I'm going to look at broad indexes because if you read anything, if you know anything about stock investing, they say no investor, pretty much, maybe a handful, but very few, if any, investor or investment funds or any of those portfolio managers can beat the market consistently picking individual stocks. So index investing has become the way that most people invest, especially individuals. But when it comes to portfolio managers, they pick and choose. Some years they hit it out of the park. Some years they don't hit it out of the park. More often than not, when you annualize their returns, it is worse than just indexing the market. So let's look at what's happened. We talked about what's happened to home prices and to interest rate over the last few months. So let's look at it as just from the beginning of the year, because that's the easiest thing in the world to do whenever you're looking at charts of the indexes. So like I said, year over year, home prices are up 16.9%. But in this year, they're probably already up nationally, or at least in the markets that we're in, somewhere around 7 to 8%. I mean, it's still a very fast moving environment. So we're looking at a very high appreciation year this year as well. But the Dow Jones, which is the one you hear all the talk about, it's not the one that most people utilize to, see what the economy is doing, but the Dow Jones Industrial Average is down 12% year to date. Your other major indexes, like the S&P, that people say in general is a good indicator of what's happening in the economy, the S&P is down 16.11% year to date. The NASDAQ is down 25.44% to date. The Russell 2000 is down 21.12% year to date. Your 10-year bond, you're getting 2.92%. To lock your money up for 10 years, 2.92%. Your 30-year bond, 3.08%. 3% return for a 30-year bond. Municipal bonds, muni bonds, the 1 to 30-year range is anywhere from 2.03 to 3.29%. I bonds, this is the one that everybody's talking about recently because the returns are so incredibly high. I bonds, their return is over 9%. I believe right now it's 9.62%. But guess what? You can only invest $10,000 a year in the I bonds. That is not enough money for most of our investors, and for anybody interested in real estate, that's going to leave a whole good chunk of change lying around completely unutilized that you are losing to inflation. So when you look at those returns, negative 12, negative 16, negative 25, negative 21, positive 2.9, positive 3.08, positive 2 to 3%. Then you have to ask yourself, yes, those cash on cash returns used to be 9, 10, 11%. Maybe now they're 5, 6, 7%, maybe 8 on the high side. Is that return really that bad for year one whenever these are your other options? You have to look at this and say, what else am I going to do with my money? Because yes, in year one, your returns are compressed, but they're still better than your other options. And then as you continue, your rent increases. As you continue getting your tax benefits, you see that your return continues to grow and grow and grow. I mean, we're still seeing, even with just your cash on cash beating these returns, you then have your tax benefits that come in. So you're essentially not paying tax on that first year, because with the compressed cash flow, suddenly all of your write-offs beat your cash flow. So when you look around, just look at the world that we're in today and tell yourself, what am I going to do with my money? Because leaving it in a bank account earning 0.5% interest, if you're lucky, isn't the answer. Investing in these other things is going to lock your money up long term at a lower rate than you can get cash on cash wise with real estate. So my question to you is, what else are you going to do with your money? And is it going to get you where you want to go? So think about these things as you are going through your real estate research and investing journey. I hope it's been helpful for you, because you can see that even when times get crushed, even when returns get crushed, it's still better than what's going on out there. I mean, we are expecting to see rent growth somewhere in the high singles, maybe low double digits. That's going to be better than any return out there that you're going to see for stocks or with the bonds, long term. So I hope it's been helpful for you. If it has, please click the like button and let us know. Don't forget to subscribe to our YouTube channel and click the notifications bell as well, so you don't miss out on any future videos. Once again, really appreciate you joining us here. Don't forget to check us out at renttoretirement.com. That's renttoretirement.com. You can also see all of our inventory there, schedule a call with a strategist such as myself, and just see who our partner companies are who can help you in your real estate journey. You can also see our inventory at renttoretirement.com/hotlist. That is not as up to date as what's on our website, but if you want an easy way to get properties sent to your phone, renttoretirement.com/hotlist. Really appreciate you joining me today. I'll see you on the next video.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.